Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Thursday, May the 4th, 2023. And happy May the 4th to all of you who celebrate. The North Carolina House of Representatives unanimously passed a bill on May 3rd, Republicans and Democrats alike. This bill would prohibit the state from accepting payments in the form of central bank digital currencies. This bill is called House Bill 690, and it now moves to the Senate for consideration. If passed by the Senate and signed into law by Governor Ray Cooper, North Carolina will not only be the first in flight, North Carolina will become the first state in the United States to ban central bank digital currency payments. Now, this North Carolina bill is part of a growing trend of opposition to central bank digital currencies in the United States. Back in March, Florida Governor Ron DeSantis called for a ban on CBDCs. He said that they could be used to track and control people's financial transactions. At the federal level, a number of lawmakers have also expressed their concerns about CBDCs. Representative Tom Emmer from Minnesota said that central bank digital currencies could be weaponized as a political tool. Senator Ted Cruz worries that they could give the government too much control over the financial system. It remains to be seen whether the North Carolina bill will be passed by the Senate and then signed into law. However, its passage by the House of Representatives is a sign of the growing opposition to central bank digital currencies in the United States. Share prices of several regional banks in the United States tanked in after-hours trading on May 3rd. This was despite assurances from Federal Reserve Chair Jerome Powell calling the banking sector sound and resilient. And that was just hours before. Almost as if people don't believe Chair Powell. One such regional bank is PacWest Bancorp. Their shares fell a whopping 52.5% in after-hours trading. This was after Bloomberg reported that the bank would explore strategic options on May 4th. Will PacWest be the next bank to fall? Bloomberg said that the bank is reportedly considering either a sale or raising some capital. Western Alliance Bancorp fell 22.4%. Metropolitan fell 16.2%. And Homestreet dropped 7.8%. Now, Metropolitan Bank once offered services to crypto firms, but closed its digital asset vertical in January because the firm was not happy with how the cryptocurrency industry was shaping up. Western Alliance Bancorp integrated blockchain-based payment solutions for its client base from the firm's blockchain and digital asset branch. Powell attempted to address the concerns about the banking sector as he announced the Federal Reserve would hike interest rates by another 25 basis points. Quote, "Conditions in the banking sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector." He said the Fed was, quote, "committed to learning the right lessons from this episode and will work to prevent events like this from happening again." First Republic Bank's collapse was the second biggest bank failure of late. Rumors of First Republic's impending doom first surfaced on April 26. That was when the news about a government receivership broke out. And the fallout of that was the bank share price plummeting 20% in just hours. PacWest Bancorp's 52% fall is set to wipe out about $340 million from its market cap. That same market cap was $772 million at the May 3rd close. And I want to thank you for joining me here at the Crypto Overnighter, and I'd really appreciate it if you could like, follow, and subscribe to the podcast. It's a huge help in attracting new attention to the show, so thank you. Coinbase has stopped issuing new loans through its Borrow service. This service allowed users to borrow up to $1 million using their Bitcoin holdings as collateral, all with no credit check. Coinbase did not say why they were shutting Borrow down. It does come amid increased regulatory scrutiny of the cryptocurrency industry. The SEC has been cracking down on crypto exchanges. Coinbase is facing a lawsuit from the SEC over listing certain digital assets. Digital assets that Chair Gensler insists are securities. even though back in 2018, when he was actually teaching on the subject, he was singing a very different tune, but that's another matter entirely. The borrow service was a very popular feature for Coinbase users. I wouldn't count on it coming back though, at least no time soon. Coinbase is still facing regulatory uncertainty, so they may focus on other products instead of borrow. For now, Coinbase users with existing loans through borrow can continue using the service. However, new users will not be able to take out loans through borrow. This is just the latest development in the ongoing regulatory battle over cryptocurrencies. Until they get some common sense regulation in place, Coinbase and the other crypto exchanges will have to continue to navigate a murky regulatory environment. Now, what does this mean for you? Well, if you're a Coinbase user who has an existing loan through borrow, you don't need to do anything. You can continue to use the service as normal. However, if you were planning to take out a loan through borrow, you'll need to find another option. Coinbase is not currently issuing new loans through the service. The government of Nigeria has approved a national blockchain policy. This policy aims to establish a blockchain-based economy. They want to facilitate secure transactions, data sharing, and an exchange of value among individuals, businesses, and of course, the government. The policy was developed by the Federal Ministry of Communications and Digital Economy. They used stakeholder consultations in both the public and private sectors. It was developed on behalf of the federal government of Nigeria. It was created to be in line with the seventh pillar of the National Digital Economy Policy and Strategy. That pillar focuses on digital society and emerging technologies. This is an expansive policy that covers a number of different areas, including initiatives to establish a blockchain consortium in Nigeria, strengthen the regulatory and legal framework, create blockchain business incentive programs, foster digital literacy and awareness of blockchain technology, and establish a national blockchain sandbox for testing and piloting. Now, despite this new policy, transactions using cryptocurrency remain illegal in the country, which is just incredibly illogical. You want something that works like Bitcoin, on a blockchain even, but you won't allow it to be Bitcoin. That's just really strange. Now, this policy does have the potential to help Nigeria become a leader in the blockchain industry. It could help boost the country's economy. One of Nigeria's biggest challenges is a lack of skilled workers in the blockchain industry. They need to invest in education and training if they want to develop a workforce that can support the growth of the blockchain industry. Another challenge is the lack of infrastructure. Nigeria needs to improve its internet and telecommunications infrastructure to make it easier for people to use blockchain technology. And finally, Nigeria needs to create a favorable regulatory environment for the blockchain industry. It is critical to ensure that there are clear rules and regulations. That way businesses are comfortable that they can operate without fear of legal repercussions. Now, despite these challenges, the approval of the national blockchain policy is a positive development for Nigeria. This policy has the potential to help the country become a leader in blockchain technology. It could also help boost the country's economy. If only they have the sense to drop their failing central bank digital currency that less than 0.5% of the population is using and embrace cryptocurrency to shore up their failing economy. FTX is trying to claw back nearly $4 billion from Genesis Global Capital. Genesis was largely repaid the nearly $8 billion in loans it made to Alameda Research. This was in the weeks leading up to FTX's bankruptcy last November. According to a court filing, Alameda repaid $1.8 billion in loans to Genesis. They also pledged $273 million to Genesis in the 90 days before FTX's final collapse. Genesis also withdrew another $1.6 billion from FTX. In addition, Genesis Global Capital International, so a different unit, they withdrew another $213 million in that same period. FTX is now trying to get back those funds. They say they want to use that money to help pay back their creditors. Millions of customers are owed billions of dollars. Meanwhile, 4 media outlets are trying to get information about some of those creditors. Bloomberg, Dow Jones, the New York Times, and the Financial Times filed a motion in January asking the court to unseal the names of FTX's creditors. The media outlets argue that the public has a right to know who FTX's creditors are. They say that the information is important for journalists and the public to understand the impact of FTX's bankruptcy. The court has not yet ruled on the media outlets' motion. The US SEC has stepped backwards in regulating the crypto sector. They had initially proposed a definition of digital asset. They have now removed that definition from their latest hedge fund rule. The SEC's decision is a disappointment to many in the crypto community. Everybody is hoping for more clarity from the SEC, and the SEC is still dragging its feet in considering how to regulate the space. Now, of course, the SEC's decision does not mean that digital assets are not subject to regulation. Oh no. Gensler won't let that go. They said that they will continue to apply existing securities laws to digital assets, and they have proposed new rules that would specifically target crypto companies. It's frustrating that the agency has not clarified how it will regulate the industry. The SEC's decision is likely to have a number of implications for crypto investors. First, the SEC's enforcement actions show that the agency is willing to take action against companies that they claim violate the law. Second, the SEC's decision could lead to increased volatility in the crypto markets. As investors become more uncertain about the regulatory environment, they may be more likely to sell their digital assets. Also, it could make it more difficult for crypto companies to raise capital. As people become more concerned about the lack of a regulatory environment, they may be less willing to invest in crypto companies. That said, this decision will likely lead to more innovation in the crypto space. As companies try to find ways to comply with the law, they are going to develop new products and services that will make crypto more accessible and user-friendly. And that brings us to our cover story for tonight. A new bill was introduced by lawmakers from both sides of the aisle in the United States House of Representatives. This bill would prohibit members from Congress and their spouses and dependents from trading or owning certain financial instruments, including crypto. The bill is called the Bipartisan Restoring Faith in Government Act. It was introduced on May 2nd by Representatives Alexandria Ocasio-Cortez, Raja Krishnamoorthi, Brian Fitzpatrick, and Matt Gaetz. 2 Democrats, 2 Republicans. It's nice to see a little bit of cooperation on such an important issue. This bill requires members of Congress to either sell or place in a blind trust any assets that fall under the ban. Now, this has a deadline of within 90 days of the bill's passage. Failure to comply could result in civil charges from the U.S. Attorney General, with potential fines of up to $50,000. The sponsors say that it is necessary to restore public trust in government, because that trust has certainly been eroded by the perception that lawmakers are enriching themselves at the expense of their constituents. AOC said, quote, "The ability to individually trade stock erodes the public's trust in government. When members have access to classified information, we should not be trading in the stock market on it. It's really that simple." The bill's text suggests that ownership of certain cryptocurrencies could also be included in the ban. Members of both the SEC and the CFTC have said that Bitcoin qualifies as a commodity. Even so, we do know that some aren't quite so sure about Ether. In 2021, AOC said that she avoided investments that could represent a conflict of interest. She applied that policy to both stocks and crypto. Under the Stop Trading on Congressional Knowledge Act, or STOCK Act, U.S. lawmakers are largely required to report investments, but they're still allowed to oversee or propose legislation on matters potentially related to companies for which they own stock. So let's look at it. It's a $50,000 fine. Is that enough? Knowing how much money can be made, is that fine of $50,000 enough? Let me know in the comments. Representative Lois Frankel reportedly sold her stock in the troubled First Republic Bank and then purchased some for JP Morgan just before the sale. Smells like insider knowledge used for profit to me. Policymakers have previously suggested ways to expand the scope of the Stock Act to outright prohibit certain investments. Yeah, I don't see that happening. Now, many in the U.S. public have suggested that the practice of allowing members to own stock or accept financial contributions on behalf of companies was ethically dubious. I would be one of those people. Normally, I'm pretty pessimistic about a bill's chances in today's political climate. This is a little different. It's bipartisan, and it's an issue that is likely to resonate with voters. So, at present, it's a little unclear whether we'll have enough support to move through both the House and the Senate before arriving on President Joe Biden's desk to be signed into law. But the bill's introduction is a sign of growing momentum for reform on the issue. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.